Thank you, Mr. McNamara, for those insightful remarks. As he was talking about the struggle we have with reauthorization, it reminded me a little bit about my marriage. We've been married 41 years now, but I can only get my wife to reauthorize it 1 year at a time at our anniversary. So I know the feeling. Many of you, if not most of you, know our next speaker. This morning, it's the Associate Administrator for the Federal Insurance Administration and Mitigation Administration, Mr. David L. Miller. Prior to his current position, Mr. Miller served as Administrator for the Iowa Division of Homeland Security and Emergency Management for 11 presidentially declared disasters. During his time there, he led Iowa to achieve national accreditation under the Emergency Management Accreditation Program, making Iowa one of only 12 states in the country to have an approved enhanced state hazard mitigation plan. And we all know how important those plans are. He's a former radio man of the U.S. Navy and has served as President and Vice President for the National Emergency Management Agency. Please join me in welcoming Mr. David Miller.
Good morning, everyone.
Good morning.
I was going to woohoo, but I was told I couldn't do that. Part of my purpose this morning was to give you the status of the NFIP program. And I'll start in with that and then maybe make a couple of comments, much maybe to the chagrin of my staff, because they never know what I'm going to say. I want to talk about the NFIP program in terms of policies. In policies, we have 5.5 million policies in force, representing about $1.2 trillion of insurance in force. In fiscal year 2011, the NFIP collected $3.4 billion in written premium, with an average being about $612 for premiums. The bad news is we're losing policyholders. The good news about it is the program gained. I like the good news, bad news stuff. It's funny as a bureaucrat how we can express bad news in terms of gain and then talk about it's confusing. The program gained 477,396 new policyholders. That's the good news part. The bad news part is we lost them on the end. We lost them and those that sought to be reinsured or renew their policies. The net loss is 0.4%. It's a cyclical problem that can be attributed partially to the economic factors that we face, unemployment rates, unprecedented home foreclosures, and frankly even the lack of severe weather events, that people aren't seeing the need to renew their insurance policies. In high flood risk areas, there was a decrease of 22,800 policies. In moderate to low risk areas, there was an increase of 4,000 policies. A major challenge has always been policy retention. In the area of claims, the NFIP paid $2.2 billion in claims in fiscal year 2011, with the largest flood event being Hurricane Irene. Flooding affected large portions of the country from New England and the Mid-Atlantic to Missouri, near my home state of Iowa, and North Dakota. Hurricane Irene, striking the East Coast down to North Carolina, resulted in 51,000 NFIP claims totaling $1.2 billion. Tropical Storm Lee, hitting primarily New Jersey and Pennsylvania, produced 11,000 claims and a payout of $402 million. And in North Dakota, there was flooding to the Souris River. I wonder if that's related to that little thing on your phone. I've been trying to find out who that is. But there was flooding on the Souris River caused by the Garrison Dam spillway, water that came over that. The flooding in the Midwest was unusual as a series of actions upstream in Missouri and the Mississippi rivers caused the flooding of areas downstream that would have otherwise not been flooded. That happened with, again, the intentional blowing up. We've got to find a kinder way of saying that. The blowing up of the Birds Point levee, the opening of the Morganza spillway in Louisiana, and the opening of the spillway at Garrison Dam in North Dakota in June. It prompted downstream property owners to rush out and buy policies. That was the good news. But we engaged in a little thing called flood in progress, which means a lot of those weren't covered. They were within that 30-day window that we look at for policies to come into effect. We had a flood in progress, so those that were seeking immediate relief, that saw the immediacy of the need to buy flood insurance, were not getting covered for that event. The financial status of the program, this is another one that I like, because I think every time I listen to a press clip or somebody on, my debt keeps growing up and my staff keeps telling me we're buying it down. I'm trying to figure out the truth of that. The outstanding debt to the Treasury remains at $17.75 billion. We have the authority to borrow up to $20.725 billion. We've been able to pay $2.46 billion in interest on that debt. And while impacted by a number of flooding events, we've been able to pay all claims over the past year without increasing the debt. I think that's a good story. The question is whether we can continue in this vein, what the next severe weather event will be, and if we'll have to incur more debt as we move forward. The last thing I want to talk to you about is whole community. I know from my experience, even as a state director, that it takes the whole community to produce any program, to engage emergency management, to do everything we did. And when I came to the insurance program, I noted that we had to do the same thing. What was surprising to me was the number of stakeholders we met. I thought I knew the alphabet soup of the federal government and state government. I didn't begin to know. I've been fit-nicked and wrapped around acronyms for the last 6 months that I never dreamt existed. But it emphasized one point, and it is that we do need the strength of our partners, and we do need to take a whole community approach to how we understand mitigation and the National Flood Insurance Program. On the insurance side, the companies that have joined us since 1983 under the Write Your Own campaign and the Write Your Own program have been an indispensable part of placing NFIP in the middle of the insurance marketplace. Local agents and adjusters have delivered the benefits of the program in a manner that could not otherwise be done. And we've had the discussion, one of the early ones I had was with Write Your Own companies and the issue of adjusters and how we went through this. And it again showed the need for the partnership, that we have to go through this together. We even had a little bit of a discussion that we may have later in the day that talked about, well, what if there wasn't surety in the program, it wasn't stabilized, more Write Your Own companies had to pull out of the program. After all, their reputation and their business lines were on the line. What happens if they pull out? Clearly, we would have difficulty in the NFIP. We'd have difficulty in executing it, meeting the demands of the program. We need the partnership to be able to move forward. And I think by working together, we can seek the reforms that we need to find, reform the program, make it stronger, make it relative, make it reflective of the risk we face, and at the same time talk about the affordability issues. But in order to get there, we have to work as a whole community. I watched last night and I went to the reception, and it was interesting to listen to the dialogue and the discussion about reauthorization and reform. And it's what I call a dynamic tension in the room. Is how do we move forward this far? How do we stabilize this far? What reforms are we really talking about? Are we talking about actuarial soundness? Are we talking about the debt? Are we talking about affordability? That dynamic tension's in the room. I see that as a good thing. It's a good thing that means people are excited about it, they're engaged about it, we can have an honest discussion about it, and I think in the end, and Jason, I hold out eternal optimism, in the end, we'll have a great reform package and be able to move the program forward for the citizens of the United States. I thank you for being here this morning, for giving me an opportunity to speak to you. I look forward to engaging you during the next couple days. Thank you very much.